There is no collapse or crisis according to the government and mainstream media. The country could be burning to the ground and left in a pile of rubble, and they would still try to suggest that everything is just fine. Economic indicators prove we're seeing worsening conditions. The question is, which indicators are important and what exactly are we looking for? You came here for the truth. Today we are going to get into the top 8 indicators I believe are very critical indicators related to the global economic collapse. Now, I'm showing you 8, but there are thousands of different indicators that I've shown throughout the years. Let's look at these 8 today. I believe these to be very important, beginning with the civilian labor force participation rate. And just to stop for a moment, these may be for the US, but you have, no matter where you live, you've got similar or the exact same indicators. So just do some searching and you will find these for yourself. The civilian labor force participation rate measures the actual amount of people working. When you look at the unemployment rate, which in the US is provided by the BLS, the Bureau of Labor Statistics, what you see is a falsified figure. And the way they do this is simply that if you've been looking for work for 1 year or more, you're wiped off the statistics. And that's how it's done. Of course, individuals who just graduated out of school and are now looking for work, they may not end up on these indicators either. So it's very skewed. So instead, we look at the actual total amount of people employed. And judging by this chart, you can see what has happened. Approximately the year 2000, you see a decline ever since. And the decline is significant. There is no doubt about that. And you're going back to decades old measurements here. And that shows me how bad the situation truly is in terms of employment. Moving on. The Baltic Dry Index, while this is something that fluctuates up and down as time goes on, it is clearly obvious. During the financial crisis, it took a big dive, and in fact it did so after hitting some all-time highs. But in general, we have a decline on our hands as well. The Baltic Dry Index is essentially a shipping indicator. It would be something along the lines of how many people are importing and exporting, how many people are shipping, how many people are buying and selling. That's sort of what we look at with the Baltic Dry Index. There are many indicators of the shipping industry, but this happens to be one of the most important. So definitely look at that and look at the fact that at this time we are near record lows. If you go to look at Bloomberg Index or something, you may get the 5-year picture, and things look a lot more rosy when you're presented with an indicator around that range. At least it doesn't look that bad. But compare it to what we have seen. We are looking at dire straits at this time related to the shipping situation. This is right out of the St. Louis Fed, a very important website. All Federal Reserve Bank's total assets. So essentially what we're looking at is the balance sheet of the Federal Reserve. How much money have they printed and they're willing to talk about? Well, this right here shows you, although stagnant over the past, let's say, couple years, specifically here we go, financial crisis, extremely high, and ever since then has been increasing to the tune of $4.5 trillion. You can see that there was a steady increase over the years prior, just slowly creeping up, creating inflation. But during the financial crisis, that went parabolic. So again, we want to look at the Federal Reserve and their actions and what exactly they are doing. I'm always following that. This is the US debt clock, when they also have their debt clocks for other countries too, so definitely check out this site. One of the important things on here is the US national debt. This is an indicator which I like to look at. I do believe that it is covered up, and we can see that at some points it just remains stagnant for a long period of time, which is obviously false. However, I do believe it is important just to show you the amount of debt put on the system. And it shows you other things, debt per citizen, debt per taxpayer, and so on. It also shows you the deficits that we are into at this time. There are other indicators that I really like on the US debt clock, one of them being poverty and others in this region here. Poverty being a very important one, because that is a true indicator far beyond, unemployment statistics and the fake inflation and all that. US food inflation. And this is the manipulation that we see. I'm showing you this chart to try to get it through your head that this is fake. According to this, in real terms, you're looking at this goes back to 1920. Basically, what they're trying to suggest, and I can't believe this, that there has been no food inflation since 1920 in real terms. That's when you know there is a manipulation, that there is a falsification of the figures that we see. I suggest, instead of looking at the charts for food inflation, look at your bills. Think about the price of a basic food that you have been buying every week for, decades. Whatever that would be to you, whether it's, a loaf of bread, milk, or whatever. I don't know about you, but these things are constantly adding up. And it just seems to me that the true indicator, how much I spend at the store, is not in, let's say, collaboration with what we would see in the charts. So check out the stores for that one. This right here, back to the St. Louis Fed, government social benefits, and specifically the SNAP program, also known as food stamps. Food stamps are a critical indicator because, once again, just like poverty, they show the real situation. And while over the years there has been an increase in the amount of recipients of SNAP, since approximately the year 2000, a very critical time frame, although the crash, I believe, was rather limited, that we experienced the dot-com boom. I do believe that that moment in the year 2000 was very critical, around 2000, 2001. It started off a lot of things. That's not the topic of this video, but I'm just showing you that. Now, while there has been a little bit of a taper off, I mean, you're still at, I believe it is 45 million plus people currently on the SNAP program. When 45 million people need a food stamp to survive, you have a critical situation. Consumer inflation. Now, Shadow Stats provide some excellent recalculations of certain statistics, certain indicators. They do unemployment, real unemployment. They do inflation. There's a lot on there. If you haven't seen it for yourself, Shadow Stats. It's John Williams, who is one of a few that recalculate, in this case here, inflation based on the 1980s method. And that is using their own methods, but the way they were calculating it back in 1980. That's what's critical about it. It's not his own calculation. He's just doing it based on the old school way. So, the red is the fake inflation that we see provided by the government. And you'll see it to be, let's say, 2% or so. And notice the numbers relatively track each other, but they seem to be, there's this divide that I can see here that just keeps on growing and growing. Regardless, you look at this and you're seeing about 10% inflation. To be fair, because it all depends on what you buy and what city you live in, and there's a lot of factors. But to be fair, I think we could put it somewhere right in the middle, and we're looking at about at least 5%. I mean, that's minimum. When you look at some of these energy prices, the electricity that we're paying for, it seems like it's a lot more than 5%. But let's be conservative and say we're about twice, a little more than twice as high as the indicators that they are showing us. So inflation, obviously, very important. The way you do that is the easiest way, beyond looking at shadow stats, is to, when you're at the grocery store, see what you're paying, how much it's increasing by, not just month to month, but look more on year over year. And then you compare that to, in addition to the electricity prices that you pay. So these are two very, very important indicators. And then this, last but not least, United States building permits. And this is, again, available, I saw, for Canada as well. I believe building permits are a relatively good sign for what's coming down the pipeline here. As you can see how much construction there is, how much interest there is in, all the things that go in there when we have the commodities that are being used, the copper for the wiring and the steel construction and the concrete and everything that's involved in that. So building permits, I believe, lead to a lot of consumption, and it's done so on a rather grand scale, because it's not you as an individual going to the store buying an iPod. It's a lot bigger than that. So building permits are a great indicator, I believe, of what's to come. So if these start declining, as they did during the financial crisis, you could see that. Actually, this is basically showing you, it's hard to tell here, but essentially you're looking at financial crisis, and ever since then, it's been increasing. There's no doubt. But we are still at really severe lows compared to what we could have at this time. So we really need that to accelerate in the US. Hopefully it will do so. I'm not really convinced about it, but we'll see. And these were the 8 indicators that I believe are important. There are many, many more. I will definitely cover these as time goes on. I'll add more and more and more. But I just wanted you to see these here. This is something that you won't get out there. A lot of people don't want to share what they look at. It's like they're keeping the information to themselves or something. It's a little bit silly. But anyway, I'm trying to just give out as much information as possible. So I hope you do appreciate that. That's what I'm here to do. I find the information, I collect it, I'm like a information aggregator, and then I try to put it together if in simple videos like this, or if it's more of a complicated subject, then I put it together in a book. So I hope you appreciate that. Once again, if you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my book, The Money GPS, even more informative. So head over to Amazon, where you can actually look through the book for yourself. Take care. It is now exactly 4 a.m., so I believe that it is way past my bedtime. Thank you all for tuning in.